PayPal stock is down over 80% from its high in 2021. And so the question is it down low enough now to warrant a purchase? And so that's what I'm going to try to investigate in this video. And so guys, as you smash that like button, let me run that intro. What's up guys, and welcome back to the channel. Now I want to take you into and just show you the chart of PayPal. Now you guys can see PayPal is down bad. They are down worse than a dude that pays for OnlyFans, but you can see that they're down 80% from their 2021 high. And you know, the Patreons and I, we were talking about this as this thing was collapsing. There was a lot of value investors who were saying, you know, now's the time to buy PayPal. And they, in the end of the day, they might actually end up being right. This thing might actually recover. It does have, I would say, a moderate to decent moat, because a lot of people already use PayPal to send payments, and they may not necessarily want to switch to anything else despite the fact that there's a lot of competition, but it could work the other way as well. However, I've always just resigned myself to saying that I don't really know what the industry is going to look like in the future. I've worked in the payments industry, and so this is coming from someone who's worked in the business, who still will say that, you know, I really don't know what this looks like 20 years out, but I could be sitting on the sidelines, and a lot of value investors could be making quite a bit of money here. I'm sure there's quite a few people who are watching this video right now saying, dummy, it's down 80%. It doesn't deserve to be this low. And I'm going to add to that a little bit by taking you into the valuation. So you can see from a consensus EPS estimate, this company is only trading at 11 times earnings, because they're expecting to earn $5.50 per share in 2024. And they very well could earn $6 a share, meaning that this company is trading at around 10 times earnings. And this is a pretty good estimate because they're sampling 44 analysts for the 2024 EPS. So it's probably, you know, you could probably be comfortable that it'll land somewhere around there. You got 44 views here, so there's a bit of a wisdom from the crowd. Then still, there's 30 people who believe that they're going to earn $6 in the following year. I think these are pretty reasonable estimates, and maybe not reasonable, but somewhat reliable because there's such a high sampling. But of course, that could change, right? And so that's what's causing articles like this to be written. This was the Motley Fool, where they're saying, you know, it's down 80% from its all-time high. Is it finally time to buy the stock? And they're saying that 2024 could be a turnaround year for PayPal, as the stock is trading at historically low levels, and they're just focusing on the valuation. And so I'm not saying that they're wrong. I'm just saying that, you know, we got to be careful. We got to understand the story. And this is what I mean about the story. An article was published in the Barron's newspaper today talking about, you know, how PayPal stock has been suffering, albeit it has been on a slight uptick recently. And so what should the new CEO do next? And they offered a potential solution here. And so here's what they said. They're saying that although PayPal stock has fallen sharply over the last 2 years because of macroeconomic challenges and competition from Apple Pay, Block, and others in the payment space, which has caused their margins to be squeezed, this is a challenge for the company, but the company can be doing something to offset some of the margin concerns and just competition concerns that Wall Street is seeing. And what they can do is they can focus on building a global digital wallet, but they throw caution here, before Elon Musk does with X. And you guys remember that he does want to create or turn X into a payments platform, a global payments platform. And, you know, if anyone can do it, Elon Musk can, because he's very familiar with the industry. And so a global digital wallet would be a super app of sorts, which would allow people to exchange payments or obtain financial services from across the world. And I think, you know, using something like X would be very valuable. However, an analyst goes on to say that PayPal has a huge competitive advantage right now. Nobody uses Twitter for payments, and it's very hard to convince people to actually do something like that if they're not used to it. But I would caution that as it relates to technology, if you find an easier way to do things, people will switch. And I just see that X is a very easy way to do things, because generally a lot of people are already on X, and if they're not, they would get on X. It's just an easy way to transfer payments, etc. And so I could see that working as well. However, since you have first mover advantage in terms of just gaining huge market share, I mean, 70% of Americans have used a PayPal product. That's how many people in the US have used the services or the products or services. And so, you know, because you're as entrenched as you are right now, this company has had such a long head start. they need to continue to focus on that. And I do believe that creating sort of a global payments platform that makes it easy to send money makes a lot of sense. Could PayPal make it cheaper for the vendors to transact globally using a global type of platform? And, they probably are doing something similar to that right now, but they themselves are saying that they need to find ways to allow vendors to transact with more people globally and cheaper. And I will go over that in a second. But first, I just wanted to point out that they do have a new CEO and they had a pretty good Q3. The EPS was up 20%. Revenues were up 9% year over year. So the company's not doing bad. The revenues are growing much faster than would suggest from a company trading at 10 times earnings. So that's something there and something very important to pay attention to. And what I did was I dug into their Q3 earnings report and I pulled out some points that I think you guys should be interested in. So the first thing is that they are not, this is the CEO speaking, they are not searching for new ideas for growth. What they're saying is that their assets and their position in the market is incredible, and they know exactly what needs to be done in order to grow the company out. They simply just must execute. Now, these are just good words, but I was hoping that he would provide a little bit more detail, a little bit more color with respect to what the strategy is, and he does. And so here it is. So in order to understand the next part, you got to understand how they segment their customers. And so the way they do it is they see their customers falling into three categories: consumers, small businesses, and large enterprises. And so let's look at their strategy, or at least the early points of their strategy with this new CEO. With the consumer segment, the small business segment, and the large enterprise segment. So as it relates to the consumer, it was a little bit hazy, but it just seems that the strategy seems to be giving customers more reasons to use PayPal. And by that, I mean giving them cash back credit card options and reward options, and making it easier to use the service, i.e. passkeys. So here's what they talk about. So they have the MasterCard cashback, which gives you 3% cashback on all purchases, as well as cashback on other purchases. So this would just increase usage of the service. They have 25 million customers who are using PayPal rewards. And so if they could get that number up, that would be fantastic. And finally, they've just begun rolling out passkeys to more than 10 million people to reduce the friction in the sign-in experience. And so, yes, having people on the service more often and making it easier to use the service and giving them reasons to use the service will continue to have them using the service. Now, with respect to the small businesses, they're essentially saying that we're going to try and solve one core problem, and that core problem is helping businesses get more customers. And essentially, that really means making the service available globally in almost every market. And the other area that they're going to be going after is they want to be able to provide small and medium-sized businesses the tools to not just transact globally, but innovate for them in a way where they can access critical services such as package tracking. And so package tracking now is live. But the other area is finding a checkout system that actually improves conversion rates, i.e. their next generation checkout. And essentially what it does is they can autofill payment information for consumers that streamline the guest checkout for their merchants. So I think that's very powerful. And finally, he's saying that we must get PayPal complete payments to scale globally. This is the second core priority I've asked our product and go-to-market teams to really rally behind. So what the article is saying on Barron's and what the CEO is saying in the conference call are kind of the same thing here, right? They want to scale this thing globally, which is kind of moving in that direction of becoming a global payments platform and making it easy to transact. The problem, though, is that I just wouldn't want to discount Elon Musk here with X, because that is also a global platform. And I think it might be easier for him to just allow for transacting on there. But I don't exactly know how this works. Like, can you really put a business on X and have them start transacting right away? But I guess you probably could. But that's the other thing about this. It's really hard to predict what the future looks like in the fintech space, right? And so that really is why a lot of the Wall Street fund managers and such are weary of this business. But, at a certain point, the valuation goes really low. You're trading at 10 times earnings and revenue's grown 9% year over year. It's getting interesting here. And so finally, with their enterprise customers, they have said that they've proven that they can win in the marketplace by getting approximately 10% of the global large enterprise e-commerce flowing through them. But what they're really trying to do is add services. So they're going to try and address additional customer needs such as payouts, fraud management, and chargeback automation and FX. And so I think what they're saying is that these are value-added services, and they don't only address specific customer pain points, but they also help PayPal drive additional margin. So there's some revenue here that they can gain. And so to be clear, their focus with the enterprise will be continuing to improve performance, provide additional services, and expand margin revenue. I wish they had sort of like that apostrophe statement for the other two as well, just to make it exactly clear what their focus is. I mean, they provide us with information, but there could be more that we have missed. And so overall, I do agree that PayPal is cheap. It definitely looks cheap, but the thing that's kept me away from this stock is that price relative to intrinsic value is just one thing that I look at. I also look at like what the business quality is as a whole. And in the tracker that I provide to the Patreons, they actually have right beside the price to intrinsic value is, I think, an even more important item, which is the qualitative factors. And this is what I'm talking about. I've never actually shown this on the channel before. So this will be familiar to the Patreons, but right beside the price to intrinsic value, I have this note here. Price to intrinsic value is the least important indicator. You got to always look at the qualitative. And so I look at certain qualitative items that could run you into problems when you buy stocks that look cheap. One thing is, can debt get them into trouble? Some companies have net zero debt. Some companies don't. So that's a mark against them. The more greens you have going across, the better your company is. So you can see like a company like this one here has dark greens and light greens. Light greens, it's like it's kind of okay. Dark greens, it's like it's very okay. But so you can see this company here, they look to be inflation resistant. They look to have a strong economic moat. They're not diluting their shareholders with stock-based compensation being greater than 10% of free cash flow, and intrinsic value is realized through growth. Now, I preferably like to see intrinsic value realized through growth and revaluation, because what that means is that the earnings, like the PE multiple, is low as well. But those are like unicorn type opportunities. So whenever you see a solid green yes, a solid green yes here, a strong a no, and a growth plus revaluation, those are the types of opportunities that I'll jump into hand over fist. But since I've been running this channel, I would say over the last couple of years, I don't think I've ever seen that opportunity come up yet. But it will. It absolutely will. We see stocks that have greens right across, but of course, their valuation is just a little bit high, which is why the only way you can realize their intrinsic value is just through growth. But if their valuations come down, then of course this turns dark green as well. So this is something that helps with every single security. So you compare the price to intrinsic value, and then you compare it against the qualitative indicators to gauge if it's even a company worth investing in. For example, this one here at the bottom, where they have debt, they're not inflation resistant, and they have a small economic moat. This will probably be enough to not want to purchase shares in that company unless it's super, super cheap or there's some sort of interesting type of opportunity play here. But this is something that you do have access to at that lower tier of the Patreon. Now, here's the other thing that you have access to, and I've shown this to you guys all the time. This is the tracker itself. And so you can see there's the S&P 500 up above. You can see this is where I last updated the companies. And then you can see here's, for example, Winnebago. Winnebago's currently trading at around 75% of its intrinsic value. Notice how it's somewhat cheap, though. It's trading at 9.9 times next year's earnings, which gives you a 10% equity yield. And if you wanted to see how I got to this $92 valuation, you can click right into here, and it shows you a fully detailed model on how I built up to this valuation. So it's very useful. I use this all the time. I click into this every morning, and then if I see some stocks that have moved up or some that have moved down, and I want to get a little bit more of an understanding of exactly how I got to that valuation, I click into right here, and it goes into the full model, so I can see if the model even makes sense to me or if I need to tweak anything. And if you're interested, there's, join over 200 patrons at the lower tier to get access to the tracker. And of course, if you want to join us on a live monthly call where it just helps you understand and learn more about the research and the models and, how I think about the economy, etc., you can join us at this higher tier. But that's kind of what I think about PayPal. I think PayPal's cheap, but I'm just not convinced on, the next 20 or 30 years on PayPal. Now, the people that will buy PayPal are the ones who are going to say, look, they have a moat now, or somewhat of a strong moat, and they will maintain somewhat of a strong moat into the future. And so they're fully comfortable purchasing this investment. This will be similar to the situation where I was very comfortable with investing in regional banks, where there's a lot of people who are not really comfortable with banking. And so, I ended up making a little bit of money, but the people who decided to stay away from it because they thought that there was a little bit too much risk there, they also made the right decision. And so here's one of those situations where I don't think you can be right or wrong by going in or out of this particular investment, but I want to know from you guys, is PayPal a stock for you, or are you sitting this one out? Let me know in the comments below, and I'll leave it there, and I'll see you guys later.